$75 billion vanished from the crypto market in a single hour on Saturday, not because of a hack, not because of regulation, but because bombs started falling on Tehran. While Bitcoin crashed below $64,000, gold blasted past $5,400. Two assets that were supposed to move together just divorced in the most spectacular way possible. And buried in the chaos, one anonymous crypto wallet quietly pocketed $500,000 because someone knew the bombs were coming. Here's what you need to understand. For years, the crypto industry sold you a story. Bitcoin is digital gold. When the world burns, Bitcoin rises. It's your hedge against chaos, your shelter from the storm. That pitch convinced pension funds, sovereign wealth funds, and 40 million retail investors to park their money in BTC. But on February 28, 2026, when the United States and Israel launched Operation Epic Fury against Iran, the largest joint military strike in the Middle East since the Gulf War, Bitcoin didn't act like gold at all. It acted like a tech stock on a really bad day. And that changes everything. The obvious reaction is simple. War creates uncertainty. Uncertainty causes sell-offs, prices drop. Standard risk-off behavior. But here's why that explanation is dangerously incomplete. If Bitcoin were truly digital gold, it should have surged alongside actual gold, which jumped to record highs above $5,400 an ounce. Instead, Bitcoin dumped 6% while gold rallied. The so-called safe haven crumbled at the exact moment people needed safety the most. So what's really going on? Here's what nobody is talking about. Bitcoin's weekend crash wasn't just about fear, it was about plumbing. Crypto is one of the only large, liquid asset classes that trades 24/7. When Israeli jets hit Tehran on a Saturday afternoon, and Iran launched retaliatory missiles at U.S. bases across Bahrain, Kuwait, Qatar, and the UAE, traditional markets were closed. Stocks, bonds, oil futures, all locked until Monday. But Bitcoin, wide open. So every hedge fund manager, every risk desk, every algorithmic trader who needed to reduce exposure immediately had exactly one option: sell crypto. $192 million in Bitcoin futures were liquidated. Futures volume exploded to $68 billion. Bitcoin didn't crash because people lost faith in it. It crashed because it was the only thing they could sell. The very feature that crypto evangelists celebrate, 24/7 global liquidity, turned it into the market's emergency exit door. That's not a safe haven. That's a punching bag. That's only half the story. While millions of traders were panic selling, a handful of players were getting spectacularly rich by betting on war itself. On Polymarket, the crypto prediction platform, the Will the US Strike Iran? Market generated $480 million in trading volume. One trader, known only as Vivaldi007, joined the platform on February 8th and spent weeks buying yes contracts on a U.S. Iran strike. Everyone thought he was throwing money away. Then the bombs dropped, and he walked away with $385,000. But here's the part that should make you uncomfortable. A brand new wallet called Roiha 2026 appeared just 11 hours before the strikes were confirmed, dropped $50,000 on a single bet that the U.S. would attack Iran, and netted $494,000 in profit. 11 hours. A fresh wallet. Nearly $500,000 in gains. Regulators are already asking the obvious question. Did someone with access to classified intelligence use a crypto betting platform to cash in on a war? Previous cases of suspiciously timed geopolitical bets have led to criminal charges. So here's what this means for you. If you own Bitcoin, you now have proof that in a genuine military crisis, your digital gold behaves like a high-risk growth stock. The BTC gold decoupling that happened on February 28th isn't a one-time glitch, it's a structural reality. Bitcoin trades on liquidity and sentiment, not scarcity and safety. Meanwhile, the fact that anonymous wallets can profit from war predictions raises a question no one in crypto wants to answer. When your decentralized, permissionless financial system becomes a casino for insider war bets, is that freedom? Or is that a problem? Monday's stock market open will be the real test. If equities dump, and analysts warn they will, Bitcoin could slide toward 60,000 or lower, testing the floor that barely held during the February 5th crash. But the bigger story isn't the price, it's the narrative. The digital gold thesis just took a bullet, and the prediction market scandal could hand regulators exactly the ammunition they've been looking for. The question isn't whether Bitcoin will recover. It always does. The question is, what is Bitcoin actually for?